Hello, and welcome back to the channel. I'm Algabot, and this is the place where we take real MetaTrader 5 expert advisors apart and study exactly how they think. Today we are looking at a strategy called Apex Compression Break. It is a pure price action breakout system, with no indicators at all, just the raw shape of the candles themselves. By the end of this video, you will understand how it spots a market coiling into a tight range, how it waits for one decisive candle to break free of that range, and how it places its stop loss and take profit. This is educational content, so let's get into it. So what does this expert advisor actually do? Apex Compression Break is built around a single, very old observation about markets, the idea that price tends to coil before it expands. When a market goes quiet and its range tightens, energy is effectively building up inside a narrowing box. Sooner or later, that tension resolves with a sharp move in one direction. This strategy is designed to measure that compression and to position itself for the expansion that often follows. The important thing to understand is that there is no moving average here, no oscillator, no relative strength index. The strategy reads nothing but the highs, lows, opens, and closes of recent candles. It looks at a recent window of bars, which it calls the apex or the coil, and it measures how tall that range is. Then it looks at the window of bars immediately before it and measures that range too. If the recent range has shrunk to a defined fraction of the earlier range, the market is considered compressed, and the strategy starts watching for a breakout. Because it relies only on price structure, this approach can be applied to almost any symbol and almost any time frame. You could run it on a major currency pair, on gold, on an index, or on a higher time frame to capture larger swings. It is a clean, transparent piece of logic, which makes it a great teaching example. In terms of who it suits, this is a strategy for traders who are drawn to breakout and volatility expansion ideas rather than mean reversion. It is patient by nature. It will sit on its hands through long stretches where the market is simply trending or chopping without compressing. It only acts when the specific coil and break pattern lines up. Remember, throughout this video we are studying the mechanics for educational purposes only. None of this is financial advice or a prediction of future results. Let's walk through the exact logic, step by step. First, the expert advisor only acts when a new bar has fully formed. It checks the time of the current bar, and if nothing has changed since the last check, it does nothing. This keeps every decision based on closed candles, never on a flickering, unfinished one. Next, the strategy builds what it calls the coil box. It scans the most recent window of bars, set by the RangeBars input, and records the highest high and the lowest low across that window. The distance between them is the box height. Then it does the same thing for the window of bars immediately before it, giving a prior range to compare against. Now comes the heart of the idea, the compression filter. The strategy detects a valid coil only when the recent box height is less than or equal to the prior range multiplied by the contraction ratio. So if the ratio is set to 0.8, the recent range must be no more than 80% of the earlier range. If the market has not actually tightened, the strategy simply waits and no trade is considered. Once a genuine coil is confirmed, the EA examines the most recently closed candle as the decisive breakout bar. It measures where that candle closed within its own range. For a long signal, the candle must close above the top of the box. It must close higher than it opened, and its close must sit near the very top of its range, controlled by the BodyStrength input. That last condition filters out weak candles that poke above the box, but get rejected with a long upper wick. A short signal is the mirror image, the candle closing below the bottom of the box, closing lower than it opened, with its close pinned near its low. When a breakout fires, the strategy sets a structural stop loss just beyond the opposite edge of the coil, with a small buffer added so the stop sits cleanly outside the box. The take profit is a measured move, the box height multiplied by the reward multiple projected from the entry price. From there, the EA holds only one position at a time and lets the stop and target manage the trade to completion. Let's read through the code exactly as it appears in MetaEditor. At the top, we have the input parameters, the dials you can turn before running the expert advisor. RangeBars controls how many candles make up the coil window and the prior window. A smaller number reacts to short, fast compressions, while a larger number waits for broader consolidations. Contraction ratio is the tightness threshold. Lower it towards 0.5 and you demand a much tighter squeeze before any trade is allowed. Body strength controls how convincing the breakout candle must be. Raise it towards 0.9 and only candles that close right at their extreme will qualify. Reward multiple scales the take profit relative to the box height, and lots and magic set the trade size and the identity tag. Now the signal logic. The first line is the compression filter. If the box height is greater than the prior range times the contraction ratio, the function simply returns and no trade happens. Below that, the strategy measures the breakout candle. It calculates the candle's range, then close position, which is where the close sits between the low and the high, from 0 at the low to 1 at the high. The bull break condition requires three things together: the close above the box high, the close above the open, and the close position at or above body strength. The bear break is the exact mirror using 1 minus close position. Finally, the buffer is 5% of the box height. The stop loss is parked just beyond the opposite edge of the coil, and the take profit is the entry plus the box height times the reward multiple. Clean, readable price action logic. Let's bring this to life on the chart. On the left, you can see the first few candles swinging widely, covering a tall range. That is the prior window the strategy uses as its yardstick. Then watch what happens next. The candles tighten dramatically into a narrow band between the two blue lines. Those lines are the coil box, the apex, with the upper line marking the box high and the lower line marking the box low. Because this recent range has contracted well below the prior range, the compression filter is satisfied and the strategy starts watching for a break. Now look at the breakout candle. It opens inside the box, then drives upward and closes firmly above the upper blue line, with its close pinned right near the top of its own range. That is a strong-bodied bullish break, not a weak wick, so the buy entry triggers. From there, price expands upward, exactly the kind of move the coil was hinting at, and it reaches the take profit, which sits a measured move above entry based on the box height times the reward multiple. After that rally, watch the market settle again into a fresh, tight coil up near the highs. The two blue lines step up to mark this new box. This time the decisive candle drops straight through the lower edge, closing below the box low and closing near its own low, a clean bearish break. The sell entry fires, price falls away, and it travels down to its measured move take profit. Notice that in both cases the entry came only after a confirmed compression and a strong closing candle. This illustration is for educational purposes only and is not a prediction of how any real market will behave. And that brings us to the end of our look at Apex Compression Break. We covered how this pure price action expert advisor measures a coil against the prior window, how the compression filter decides when the market has tightened enough, and how a single strong breakout candle triggers a trade with a structural stop and a measured move target. We also walked through the code and visualized both a long and a short example on the chart. Remember, everything here is educational content only and not financial advice. If you found this useful, please give the video a like, leave a comment with the strategy you would like analyzed next, and subscribe so you do not miss the next breakdown. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.